Good morning, everybody. How is everybody doing out there? Really appreciate you tuning in. This is an unpublished or unannounced previously live stream. I'm just trying to find a better way to do this stuff. All right, well, let's start here with the market. Let's go to the Qs. Unfortunately, the Qs had a gigantic opening gap down this morning. But the good news is they bounced, but the bad news is they bounced right back into that gap. And unfortunately, there were sellers there so far, and now it's going back down again, at least on the 30-minute time frame. But it was good news that it bounced. And the other thing was, if you look at these gaps every morning with me, the bounce was predictable somewhat that it would bounce here. If it was to get beyond here, the next place that dip buyers, in my opinion, might want to look for a dip buy is 493, but right here would have been a decent dip buy if that's what you're looking for. Now, if you're a bear, then you wouldn't have done anything this morning. You would have waited for the market to rally back into the bearish gap, and then that made an opportunity to sell. You could have sold this gap and aimed for prices to go back down to this gap, or even if you're really bearish, you could have aimed your option strikes at this gap, But anyway, so there's always something to do. There's always something to do, no matter if you're a bull or a bear. There's always some kind of tactical something you can at least look at doing. All right, so let's look at the SPY and the Russell and see if, the SPY's gap, same thing, same exact thing. I haven't put this gap on there yet, but I'll do it. I'll do it later. Really, I don't usually put gaps on there unless they're still open at the end of the day. But this one's so big, I would be surprised if this gap closes by the end of the day. So that being said, you could be in for, a little bit of rough time. Now, however, look at Russell. Russell is barely under Friday's range, and Russell is still within Thursday's range. Think about how amazing that is. I mean, for how strong Russell is, the NASDAQ, on the other hand, right now is trading in the Thursday before last Thursday's trading range. NASDAQ took off about 4 days of upside with this move. But anyway, okay, it is what it is. Let's look at Bitcoin. But then we'll look at the Altiverse and we'll look at whatever else. GPTY. GPTY looked really good this morning because of that put hedge they have. Anyway, Bitcoin looks about like NASDAQ futures. Basically, Bitcoin and NASDAQ futures are pretty much the same thing. Look at NASDAQ futures. You can see they sold off overnight. Now, futures gapped. Futures don't have gaps very often. I went back and found the last gap. But anyway, futures gap between Friday's close. They don't trade over the weekend. Between Friday's close and Sunday's open, more sellers came out of the woodwork. So the first time futures get back up to this level, we might expect to see some resistance or some sellers appear. But in any event, all right. So let's look at the Altiverse. And let's start with the Altiverse is really ugly this morning when I first got up, but it's bouncing. It still doesn't look super. All right. So Alti itself is down 2.79%. The average stock, though, is down 5.4%. So there's they have a nice buffer, but anyway. All right. LFGY. This one is more DeFi based. And let me get this is their allocations as of Friday. It'd be nice if this is how much they were up or down, but that's the allocations. And that's the LFGY verse. That's how much they're up or down, unfortunately. Anyway, when the markets, when NASDAQ's pulling back, none of these NASDAQ funds are going to be doing very well, of course. All right, so that's LFGY. Now let's go to GPTY. So GPTY Well, here's the GPTY verse. So it looks comparatively better. And this doesn't have anything to do with the put spread they have on. They have a defensive put spread on that they keep on, or they've had on continuously. We'll see if they keep it on, but I bet they do. But look at them. Just as far as the constituents in their index, they look a little bit more bullish than the other indexes, because Snow's up today. I call it snowy because of YieldMax, but Snow is up today. ServiceNow is up today. CRM is up today. So all those cloud service companies are up, and then Apple's even up today. So anyway, now I will say this also. This does have to do with the permanent put spread that's on. Look at this. Would you take a look at this? This fund is my new favorite. It was Alti for a while. Now it's this one. Look at this. The average constituent in this fund is down 4.7%, but the fund itself is flat, and that's because of the put hedge. Now, that's no guarantee that it'll work out that way every time. They haven't. It's not free money, but today their hedge is working beautifully, absolutely beautifully. Let's go look at that. That put hedge is a thing of beauty. I was just looking at it this morning. I mean, such a thing of beauty. All right. So what they've done is they've bought the 500 put 190 times. They spend around $5 on it. But those puts are expensive. They're hella expensive. So they offset it by selling the 450 put. So this way they get some theta decay. I mean, because these puts are expensive too, and they sold it to offset the expense of the 500 put. What that does is it means they don't have unlimited profit on the upside. They can only make about 25%. But this hedge protects the first 25% of downside. And you can see this morning, the ratio is working out perfect. So look at this. Right here's the profit and loss graph of the hedge at expiration. And this cone over the top of it is the probability. There's a name for that thing. I always forget what it's called. But you can see the trade itself has low chance, of profit, because it's out of the money or whatever. The way it works, though, is if we're going along, I know I've showed this before, but I'm going to show it again. Let's say we're going along, and then Friday, January 31st comes along, 4 days, and then something worse than this morning happens. Something like twice as bad as this morning. So instead of the NASDAQ being down 3 when I woke up, it'd be down 6. Okay, well that's bad. But the put hedge should be worth $250,000. It would offset a lot of that pullback. Not all of it. There's no such thing as free money, but it's definitely this idea is definitely going to cut a lot of the downside volatility out of the equation. So anyway, we'll keep an eye on that, but they started with 130 contracts, then they added, but anyway, now they're at 190. I watch it every day. It's one of the most exciting things that's happened in the high yield space since Alti came out, really, in my opinion. All right. Well, this is all, well, and really, Dorsey Wright was also really exciting, but Dorsey Wright, Alti, and GPTY are pretty exciting. Remember, Alti does the put hedge thing too. They do it on an individual level on each stock with the caller. I just like this idea because it's simple. I'm just, but the Alti way is another way to do it. They're also locking out, about half of the downside in a bad pullback, I believe. So anyway, I'm really interested in this. Hopefully you guys are too. All right. So what else should we look at? Let's go back over here to the index buffer report. All right. So let's see what's doing poorly today. SPY-T pulling back as much as the index. XDTE not only pulling back about 3/4 as much as the index. Great job, XDTE. T-SPY catching all the downside, unfortunately. WDTE catching all the downside and then some. It's early though. FEET, look at this. That's the Dorsey Wright fund, not catching a lot of downside. But when we look at the YieldMax buffer report, I think the reason is because because some of the funds that Feet has in it maybe are up, but I really don't see any of them that are up. Anyway, we'll get in the middle of that in a second. All right. Anyway, for whatever reason, Feet looks good. 5E looks good. Look at JEP-I. That's a good one. Anyway, they all look good, really. Z-Vol, we'll concentrate on the bad ones. Those are, anytime you're catching less downside than the parent, that's good. But these down here, what we have Z-Vol and we have KQQQ. These are some of the more, lately been some of the more volatile ones. CEPI, which is a REX shares fund that's focused on, God, there's so many of them now. I think that's the one that's focused on DeFi or I don't know. Anyway, I don't follow REX shares as much as I should. They're good funds though. I just like the ones that sell options in the weekly time frame, like YieldMax does, or even shorter time frames like Defiance does or Round Hill. But there's nothing wrong with REX shares. All right, well, do we got any good news? TLTW bouncing a little bit. In NASDAQ land, we can look and see that the best performing on a relative basis out of the NASDAQ-based high yield funds is actually QYLD this morning. But some other ones that look decent would be QDTE and YieldMax'er. But most of the other NASDAQ ones are outperforming the index on the way down. It's just one of those mornings. All right, so not a lot of good news over here. Murny's up and Apple's up. The ones that have been getting killed the past, couple of months are up. Snowy's up. Bob is up. I really don't see how Feet and 5E are up. I thought maybe one of the constituents in Feet, say MicroStrategies or something, was up big, and but it's certainly not MicroStrategy. It's not NVIDIA. It's not NVDY. Anyway, all right, well. How are you guys doing this morning? If you have any questions, I'd be happy to take them. Hey, Tom, how are you doing? Thank you for being here. On you all, I guess some of the puts are helping it more than the buffer. Yeah, I'll agree that ULTYs, if you look at a chart of it, its performance has been less than auspicious. So anyway, but just to be honest, I was looking at a chart of course I'm always honest, but to be real honest, I was looking at a chart of all of these covered call funds this weekend. I was going through them, not just Alti, but a lot of them seem to be, I wonder if we're getting into a time when the covered call strategy may not be as good as it once was. I don't know. It seems like not just Alti, it seems like a lot of them have kind of broken trend or something. And all it is you guys know, and Tom knows, I know, but it's you have implied volatility, which is how the market prices options, and you have realized volatility. And there's sometimes that doing that trade works out better than others. Some market conditions. Also, not trying to get political, but this reminds me of the last time Trump was in office, because I'd wake up all the time and the market would be down huge, and then it would bounce and everything would be fine a couple of days later. So the type of strategy that worked for 4 years under Sleepy Joe may not be the type of strategy that'll work. Now, the Trump years, I'm not saying he's not going to be good for the market, and the last time wasn't either, but it was a different type of strategy. The Tasty Trade Back Tester lets you go back to those 4 years, and I've been testing things that work over that time frame. But anyway, it's, and who knows? And this time frame may not be like the last 4 years. Maybe that was because of Mnuchin and his relationships with Wall Street, and maybe the new guy, it's a different paradigm. I don't know, but caution, discretion's the better part of valor, what they always say, but I don't know. Hey, Haggy Herb, I appreciate you being here. I don't think I've seen you around here before. Yeah, a lot of people, like to buy on red days. I just, here's why I don't like red days, because it messes up my, all my trades that I'm showing on paper and teaching about there. I just almost always do a bullishly biased trade, because 2 days out of 3, you come in the next day and your screen's all green. But all these trades were bullish bias trades put on for, next week or whatever, but now it's just too much red on the screen. But anyway, here's this GPTY hedge trade. I was just talking about that. I've actually followed the exact, I was showing you the thing, but the amount that was up this morning is $57,000. And I've been, or that's up what it's up right now. The fund has 5 million in it last time I checked, assets under management. So the other thing is, I had it figured out the one way. Well, it looks like they're spending. This isn't. I have a bad number in here. This. I need to go back and look at these fills, but this should be around 50,000. I believe they've spent 1% on the hedge, which would be a very standard way to do it. I think, like I say, I have a bad trade in here, but anyway, so that I missed a trade or something. Anyway. But this kind of day. So here's the other thing I really like about this strategy. So the big problem with the hedge is, do I take it off or not? And if the market drops 10% and you take it off and Jay monetizes the hedge, and it's a strategy like this where he's going to put another one back on, the one he has to put on is insanely expensive. But anyway, on a hedge like this, I love, and I bet you this is the way Jay handles it. We'll ask him on the 16th when he's on the show. But on days like where we're down 5 or maybe even 10%, I bet he doesn't monetize, because if the market keeps dropping the next day and it does another 10, he's covered. But at the same time, lots of times the market bounces. And so he doesn't have to monetize, because all they want is that, the fund to be even on the end of the year or whatever. I mean, or whatever. I mean, that they would be fine with it bouncing and not having to cash this in, because their other, the other sleeve of the portfolio would be doing well. You can see the expected move on I like to look at the expected move, but this is just for the quarter. But the expected move on the quarter is putting us right about, 550 or so on the Qs. We'll see. 553. But yes, it is an opportunity. It is absolutely an opportunity. All right. But yeah, Hag, I appreciate you being here, all of you guys. So I'm probably going to let you guys go and go work on some other stuff. But I just get so frustrated this morning show, and I think I'm just going to start doing it live. And it's just going to be like this. So anyway, it'll just be quick, and we'll look at like 10 or 15 minutes. And that way I won't have to, I'm not going to post a thumbnail or anything. I'm just going to do this. All right, guys. I appreciate you all for being here. I appreciate your input as usual, not just Tom and Haggis, anyone else who's also here. I appreciate all of you guys. Have a good one.